Alrighty everyone, in this video I'm going to show you introduce you to our Discord server, how to read the information that the bot is publishing to the Discord server, and how to consume that information. So as you can see, this the TWOC multi-time frame server is the Discord server. Here we have, to begin with, you should have come down to the tutorials, read the information available here. General chat is for just talking amongst traders, people who are forward testing and back testing. This is a bot change log, how the bot has changed over time. And the most important thing here is this multi-time frame channels. So these are channels distinguished by which time frame pairs they are on. So if you're a really fast trader scalper, you should look at H1 M1 time frame, which is generating signals on M1 based on the higher time frame of H1. We have H1 M2, H4 M5, H4 M15, which I'm going to be using today in this video to show you some examples. We also have much higher time frames like a daily, weekly, where you can have swing trades. So let's look at some examples on H4 M15. So obviously I've backtested most of these signals and I'm not doing this in real time. But at the same time, I want to show you that this is not cherry picking. I'm going to show you two successful examples and one trade that did not work out very well. So let's look at this. So if you concentrate your attention here, we have a signal here for USDJPY, a bullish signal, which was generated on December 22 at 0045 UTC. And the reason for that, the HTF reason was there was a 3-candle fair value gap, a 3-candle formation that was detected by the bot on 21st December 1800 UTC. So let's go and see how this was looking at on the charts. Remember, USDJPY, bullish trade. The higher time frame reason was a fair value gap on December 21, 1800 UTC. Let's check that out. So let's go to USDJPY. All right, let's check out where is 21st December 1800 UTC. 21st December 1800 UTC. So this is where, when this candle finished, this orange candle finished, our bot detected a fair value gap. So that means any price action in this area is something that we are interested in trading. So let's mark the fair value gap. So and this is the 15-minute. On this 15-minute, anything that is any candles that are formed beyond this blue line, you can see that the next candle would have started here at 2200 UTC. So let's see how this trade would have played out. As you can see very clearly that this gray area is the fair value gap. Price came down, formed this trading range, then a sudden movement down and a sudden movement back up. That means there were resting orders sitting here. We didn't know this ahead of time. So when the price was when price had started, this is how the candle would have this is how this orange candle would have finished. And we have no idea what is going to happen. We can't trade this fair value gap blindly. This is gray fair value gap. But what we do know is that when we see this playing out in the market, where a breaker is formed, this is trading range, sudden movement down and the sudden movement back up, that means there is a presence of resting orders sitting here, a buy resting orders from institutions. All the people who have been buying in this area wanted to buy here again, and this is what we had been waiting for. So let's set this up. As I said, I know how this trade played out, so it's not that I am trading this live in front of you, but obviously all educational material is hindsight all the books you read are hindsight if you think from that perspective. But we can use this information to learn how next set of trades could play out over time. So let's continue with our thesis. Now we are waiting for price to come back and backtest this area. Let's see. So price comes back. This is where we would have taken an entry. So our entry would have been here. At this level, and at the end of the box obviously was our stop loss. So let's see how the trade plays out. And immediately trade takes off. Let me just move it out of the way. And hits 2 hours of profit for us. And obviously you would have trailed the stop loss to take partial exits and even maybe close the trade if you wanted. Now this was one trade example. Let's look at another one. Let's look at a trade that did not work out so well, EURJPY. I anticipate this was the same correlated pair, EURJPY, USDJPY, same bullish fair value gap got created. And let's go and look at what was happening on the higher time frame on December 21st 1800 UTC on EURJPY. All right, this was 21st December 1800 UTC. All right, so that means when this candle finished completing, when it finished completing, we had got our trade signal and we were waiting for this to form. And this is what we're going to go and trade on the lower time frame now. Let's create our fair value gap. This will be our higher time frame bias. And anything that happens on this side of the blue line, this obviously has not yet played out when we would have been here. So what we are waiting for is basically, let's rewind the time back. We are waiting for some sort of a bullish breaker structure to be forming in this gray area. So let's see how this plays out. Okay, so we have liquidity grab happening and a bullish break of structure. Now this work, we'll do the same things that we did previously. We'll create our trade zone and set up our risk reward ratios. And anticipate that price will now retest this area and try to run back up again. Let's see what happens. Well, it did not work out. We got an entry here. This is this was where we got an entry. And we were expecting the price to run up to this area. Obviously that didn't happen, and the stop loss for us was here, which obviously got triggered here. The trade did eventually work out after forming a very similar structure all over again. You can see that the structure here again played out in a very similar way, but obviously the place where we were taking entry was not right. So even though we were right in the direction, as you can see how the trade played out on the higher time frame, we were wrong in our entry, which is okay. I mean, trading is a probability game and we were not right this time, so we'll move forward. Let's look at another signal. Let's look at a different signal, an order block, a bearish order block on EURAUD. So let's see how that played out. So the signal says EURAUD bearish. The higher time frame reason was an order block formed at December 22 600 UTC. Let's check that out. December 22 600 UTC. Where is that? December 22 600 UTC. So our signal would have come in somewhere in this candle, and this is the order block we are looking forward to get retested. And you can already see how this played out on the lower time frame. So let's do this all over again. Let's rewind time on the lower time frame. And let's see how it plays out. So we are anticipating that price will come back up, mitigate trapped buyers in this gray order block area, higher time frame area, and then push downwards, and it will form a breaker like structure. So this is you can already see it has just started playing out. It has formed a large order block up, which we are anticipating will break down if we were to get a proper signal here. This is fantastic. This is liquidity grab, and it formed yet another order block while going up, which got broken to the downside. Now all we are now doing is we're going to trade this order block. So let's draw our order block, and we are waiting for an entry in this area now somewhere. Let's see how this played out. Okay, we got an entry. Boom. And oh, sorry, we forgot to set up our risk reward. There we go. 3R hit. You would have taken an entry here during this blue candle. Our stop loss would have been sitting over here, which was obviously not hit, and this was a successful trade based on the same logic. So all we were doing, we were just recapping. We were waiting for, let me just get these out of the way. When this order block had formed, this blue candle and this red candle, we were anticipating a retest of this area and a formation of a breaker like structure here somewhere in this area. We did nothing till that formed. When this break of structure to the downside happened, this order block pushing up, grabbing liquidity, mitigating this order block, and breaking structure, creating a bearish breaker in the process. That is when we got interested, and this was the signal that our bot had returned. So let's just go back for a second. The signal said EURAUD, and on the lower time frame the signal came at December 22 1200 UTC. Where is December 22 1200 UTC? It's over here on this red candle, on this candle, and that is when we would have entered, set up our limit orders and entered. So that these are three examples on how to read the information presented in these channels on multiple time frames. Remember, just one quick thing to remember, all of these time frames are in UTC, so you need to change your charts to reflect time in UTC, and this is how you do it. So you go here, basically you go down here, switch to UTC, both your higher time frame and lower time frame charts, and that's it. Thank you for watching.